Hello traders, the title of the video is Elliott with a trader talks about the broader viewpoint of Elliott wave forecast. Broader is B-R-O-A-D-E-R, broader. Am I speaking with my beautiful posh American accent? All right, my friend. Okay, so this is what we are about to talk about today. Elliott wave trader talking about the broader, viewpoint of Elliott wave forecast. So recently, we have started talking about how to use the predictive factor pattern, combine it with the Elliott wave principle, to accomplish, more accurate Elliott wave forecast. Okay, so last time we talked about the first step to a practical use of Elliott wave and predictive factor pattern as a technical trader. Today we want to talk about how can we use the same strategy, combine Elliott wave principle and predictive factor pattern by using the broader viewpoint. Okay. So what do we need to do practically speaking? All right. Practically speaking, for an Elliott wave trader, there are two things that we do care about. There is a trend and there is a correction. All right? Or there is an impulse wave and then there is a corrective wave. That's it. That price action like this, that's what we do care about generally. So when we are talking about a broader view, all right, if my pronunciation is not correct, let me know in the comment section, but don't make a fun of me, all right? All right, so if we see that if we're talking broader view, all right, which means a bigger view, all right, we are talking about this particular pattern. Price goes down and then there is a correction, all right? So we want to use the predictive factor pattern, in a broader view fashion. All right. So when I look at I'm looking at this stock as Symantec. All right. This is a technology stock, Symantec Incorporated, EPIC SYMC. All right. When we use the same strategy, talking about the broader view of the price structure of Symantec, what do we have? We have a trending first and a correction. That's the broader view. The correction is not finished, but at this stage, that's what we see. So I can draw on my chart that right now what I see, talking about the broader view, the Symantec from 1999, it went down, which I'm representing with this. All right. Then it came down a bit into the zone of 50%, 61.8% Fibonacci retracement level, which we call the sweet spot zone. And now it formed a kind of a V pattern. The correction is a V, and the correction is not yet finished, and it's coming back down a bit. Okay, is it going to form 1, 2, 3, 4, 5 move down before gashing it up? That is the question. So, talking about predictive factor pattern to forecast the financial market, combining it with Elliott wave principle, we want to use the broader view for Symantec. That's what we see. Price went now. There is a correction in the form of a V. How do we use that? The broader view. All right. So that pattern that I'm calling the broader view, I think my pronunciation is not very correct. Oh, let me try another one. Okay. Broader view. Broader view. All right. All right. So when we are talking about predictive factor pattern to forecast the market, we can use this specific structure up, round. Okay, round move here, and probably another move down. Let's remove, I'll leave it like this, Now, sometime, all right, you may see that a bigger view, all right, I'm on a monthly chart like this, and that a bigger view that you are seeing, which is a pattern on its own, may duplicate itself on other time frames. But all you are caring about, you don't go into the nitty-gritty of going into, dissecting every section of the price action, all right? So you look at it, you say, what do we have here? The bigger picture. The bigger picture is that the price went up and then it forms a kind of round button here. That's the broader view using, the predictive factor pattern. Here is a pattern that is in place on a monthly chart. That pattern can copy the broader view, can copy itself right from the monthly chart and duplicate itself even to the yearly chart, even to the 5-minute time frame. You may see even on the 4-hour time frame when the price may do exactly this structure. Go up and then go down, round like this, and then repeating this pattern. There is another way that we can use this broader view point, of area wave forecast. So sometimes like Symantec belongs to the NACSA 100, yes or no? So it's a component of NACSA 100. One way that we can use, the broader viewpoint of area wave forecast is to apply it, so we see now Symantec form this particular pattern because it belongs to a specific group, in this case the NACSA 100, the technology sector. We'll now go and look at other technology sector that belong to the same group and try to compare them to this specific, broader view price, structure. All right. So I'm going to go down very fast. This is another Skyworks solution. So here we have 1999. It's recently this one here. So you see, went up a correction. So we can say this from here. So it went up. So it went up. All right. Now, is this a correction? All right. Is this a correction or is this a fifth wave? So because there is a structure that we have seen on the same time frame, and we are using a broader view, we should compare it to the same time frame. So you are changing financial instrument, but you are not changing time frame. But we can use the same pattern. The same pattern can happen on another time frame. But when we are starting in first, practically speaking, I want to compare it to other financial instruments on the same sector. I will start first comparing it on the same time frame to other financial instruments. That's why I'm not changing my time frame. So this information that I have, I see here, prior went out, Symantec went out, and then from this round. Looking at Skyworks, the question that I'm going to ask, will Skyworks also form a similar pattern? That is the question I'm asking. All right. Then I will compare the pattern, the broader viewpoint of Symantec to Skyworks. If I see a bit of similarity, because Symantec is a little bit ahead talking about the correction, this one, the correction is not yet established, I may use the Symantec corrective pattern as the blueprint that I want to refer to when I'm trading the corrective phase of other financial instruments that belong to the same sector. All right, maybe am I explaining myself clearly? Or let me know in the comment section. Now, I have recorded a video today, all right, that I will be posting at Day Pro Traders YouTube channel. Now, the title of that video is Fractal Trading, Mastering the Parallel Market Prediction that Rely on Fractal Patterns. Check it out, and you understand more. The exercise that we are doing here, using the broader view pattern of a specific financial instrument as a blueprint, as the reference point, that we can compare other, financial instruments that are correlated to the first one. All right. So that's what we are doing here. So the question is, will Skyworks follow Symantec? If it is following Symantec, we have a pattern already in place, which is the pattern of Symantec, and we can refer to that pattern to forecast what Skyworks is likely to do during the corrective phase. It does not mean that Skyworks will definitely follow Symantec, but we have a pattern, talking about broader view pattern, that is in place. They belong to the same group. They have something in common. They may, so Skyworks may follow, all right, Symantec. The next stock, here it is, another stock that I have here, Seagate Technology Holdings. Seagate, you can see 2009 went up. Now it came down again. Now it's now in the corrective phase. The correction is now completed. Is it going to be a round correction that we are seeing for Symantec? For, okay, Seagate. All right. So in this case, we are not going into the nitty-gritty of detailed pattern. We're just looking at the bigger picture, and we are using that as a reference point when we want to focus another financial instrument that has something to do, that has something in common with the first one. Not only that, going back again, for Symantec itself, that pattern that is formed on a monthly chart can also copy itself, for instance, on a 4-hour time frame. So that pattern is a blueprint, it's a reference pattern, a broader view pattern that can also happen again on the lower time frame, when we will see that the price may go up, maybe on a 15-minute time frame, and form a similar pattern, up and then correction. So you may say to me, why? It's like a season, all right? So the bigger picture is the broader view on a higher time frame. Is the big daddy. It may impose itself on a lower time frame. It can take place again on a lower time frame. And when that is happening, we can take advantage of it. So we can use it for the same financial instrument, but on different time frame. We can use it and compare it to other financial instruments that has something to do with it. So now I'm on the daily chart of Symantec. You can see price went up in this section. All right. Is it going to form that round pattern like it did there? Okay. So here is similar a bit, isn't it? It's a little bit similar here. Can you see that? It went up. Okay. Here it is. You see, it went down. All right. Here it is. Wow, this is beautiful. You see that V pattern? Now it's coming down, yes or no? Will you agree? It went up on the daily chart for the same financial instrument. Now it pulled back, okay, 1, 2, 3. Now here it is, 1, 2, 3. You see, the 1, 2, 3, 4, 5 that we are expecting on the monthly chart that is happening here. So you see now, it's similar pattern on the daily chart. We can take a copy, take a picture of this daily chart pattern because they have a bit of similarity, and use the daily chart pattern that we have here as a reference point to guide us when we are trading the Symantec on the monthly chart. So we can use this portion because it went up, it formed a round pattern, now it's coming down, it went down a bit, and now we can pay attention to this section here to have a bit of idea what is likely to take place on the monthly chart. Attention please, it does not mean that on the monthly chart we will have the same move down or like it did on the daily chart, but that daily chart price structure, okay, because you can see it went up on the daily chart, formed that kind of V, and it went down more. So here we were expecting 1, 2, 3, 4, 5 down. So now we have a broader viewpoint on the monthly chart. We are trying to compare it to the daily chart, and we see a bit of similarity. And here the daily chart went a little bit down. Now we can use this section here as a reference point to focus what is likely to take place on the monthly chart. So it works both ways. So for traders that are very, very interested in combining the Elliott wave principle with the predictive fractal pattern, I highly recommend to those traders to check the playlist at the Pro Trader YouTube channel about the predictive fractal pattern. All right, or I think I call it Advanced Market Prediction. I think that was the name of the playlist, Advanced Market Prediction. All right, check it out at the Pro Trader, or check the video there at the Pro Trader. I have already recorded 5 videos about predictive fractal pattern. I know some traders already are subscribers to the Pro Trader, but if you are a subscriber to 24 Elliott Way, I highly recommend that you check the videos at the Pro Traders about predictive fractal pattern, because you need to master the subject of predictive fractal pattern as an Elliott Wave trader, whether you like it or not. All right, so here it is. All right. All right. So I'm going to go now look at another financial instrument, a series. I'm going to go back again because we are comparing two different financial instruments. I want to stay on the same time frame. There are no similarity as such here. So I'll move on very fast. So that's why you will do this kind of exercise. You can see here, this is another financial instrument, Charles Pharma Group, okay, Epic SHPG. So it went up, all right, so here it went up. Now a correction is underway. Is he going to repeat a similar pattern like Symantec? But there is a better way talking about or is parallel, okay, financial market forecast. We can quickly go and check out the market leaders, okay, and see what the market leaders are doing. This is another way to do it if you want to compare two or more financial instruments using the broader viewpoint. You will look at the market leader. You see here, you see Google. All right. So we can see that Symantec is a little bit ahead. Google is going now. Is it going to form similar pattern like Symantec? So now you can see that a lot of some stock, though they belong to the same group, they are still trending. Other stock are already in corrective phase. So those who are ahead, so remember what I said to you at the beginning of this tutorial. So all we do care about talking about broader viewpoint, we are talking about a trend and a correction. So some stock that belong to the same group are still trending. Other financial instruments have already finished their trend and they are in a corrective phase. So we may use those who are a little bit ahead in the corrective phase, use their broader view pattern on the monthly chart, on the quarterly chart, on the yearly chart as a reference point to forecast, to have a bit of idea, okay, those that are behind are likely to do when they reach maturity and they are starting their corrective phase. So this is the broader viewpoint. So to summarize the video, talking about the broader viewpoint, we are paying attention to financial instrument, training, and correction. If they belong to the same group, all right, and one is still behind, is still trailing, we can use those who have already started their correction as a reference point to forecast the corrective phase of those who are behind. We can use the same broader viewpoint pattern, predictive fractal pattern, as a reference point going to other time frame. Like I show you for Symantec, we can use that pattern, the broader view pattern, predictive pattern on the monthly chart, and now go to the daily chart. You see, so if you were here, have I changed? Where am I? I'm looking for Symantec. I'll move my line. Here it is, okay. If you were here before, so you see here the pattern took us from 1999. It's completed somewhere in 2017. Now recently, the same pattern, almost the same pattern, did happen. All right, okay. Here it is, 2017. Here it is. It took long for it on the monthly chart. Here it is. Recently, it's formed here. Now this session here, it becomes very interesting for us to use that to forecast what is likely to happen on the monthly chart. We can go from a higher time frame to the lower time frame to the higher time frame, using the broader viewpoint. So the daily chart broader viewpoint that the price form went up from this corrective phase is a little bit ahead to the picture that we have seen on the monthly chart. I will be recording more video and I will be pumping bit by bit more information, useful information, practical information that trader can use to improve how they can combine the wave principle and the predictive fractal pattern. I will stop here because we do not want the video to be too long, yes or no? All right. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video, to answer your specific question. If this video has been truly useful to you, let us know by sticking your beautiful thumbs up. If you think that, Joe, this is another, repackaging, or mark it out, and that will put us under pressure to improve our next recording. All right. If this video has been true, if you think that it's an essential tutorial that can help other Elliott traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. To summarize this video, the broader viewpoint, of Elliott wave forecast consists of concentrating on the Elliott wave cycle. the trending pairs and the corrective pairs on a higher time frame, preferably monthly chart, quarterly chart, or yearly chart, and using that broader viewpoint pattern as a reference point, as the predictive factor pattern, and compare it to other financial instruments that are correlated one way or another to the first one. We can use the same broader viewpoint, a predictive factor pattern, to forecast what is likely to happen on the lower time frame. And if the same pattern is copying itself and pasting itself on the lower time frame, you have an edge, and we can forecast that. But we can go from the lower time frame, looking at the broader viewpoint picture of a lower time frame, talking about the trending phase and a corrective phase, use that broader viewpoint of a lower time frame as a reference point, use it as a reference point to forecast what is likely to happen on a higher time frame. But the same strategy is true when we are comparing different financial instruments that belong to the same indices, the same sector, the same group. It becomes more powerful. In that case, we are saying one financial instrument has completed, the trending phase is now completing, the corrective phase. Now there is a relationship between these two currency pairs. We will use the broader viewpoint of the one that is ahead as a reference point to focus what those that are behind are likely to do. Remember, though this subject is very, 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 very exciting, it's not an exact science. We use it as a guide, to help us have a bit of idea, because if you're going to invest millions of dollars, you want to have a bit of idea. You want to buy, isn't it? You want to buy, you want to have a bit of idea. Is it going to go up? Is it minimum? That's what we are doing here. You want to sell, you want to have a bit of idea whether it's going to go down. And those are the things that we do with other things like fundamental analysis, other verification that we do, the normal Elliott way application, and together we are set to take off like a pilot, This is the end of the tutorial, and until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, talking about Elliott Way Trader, talks about the broader viewpoint of Elliott Way forecast. Have I used my American accent or my Pakistani accent today? All right, let me know in the comment section. Happy trading to you all, and speak to you soon.